Hey guys, morning. It's February 3rd. I'm recording this in the morning and it's very cold in New York. It's like 25 degrees right now. It's gonna go down to like 11 degrees tonight. So guys, stay warm, stay safe, okay? In 86, lawmakers decided to put like a kibosh on rental property deductions, tax deductions. How did they do this? They passed rules impacting passive losses, which even after 37 years cannot be fully understood. Now, there are a couple of traps. I'm going to go through them. In 86, basically the laws made you throw taxable activities in three buckets. Number one, the portfolio bucket for stocks and bonds. Two, the active business bucket for material participation activities. And the passive loss bucket for your rental losses, where you did not materially participate. Now, there are three ways to escape these buckets or the traps associated with these buckets. Well, with one bucket, the passive loss bucket. And so the escape one is called the get out of jail free card. And basically, if your modified adjusted gross income is $100,000 or less, you get to deduct up to $25,000 of rental property losses. Once you get above $100,000, then your get out of jail free card deduction drops by 50 cents on every dollar and then disappears altogether at 150K in modified adjusted gross income. Here's your second escape. So changes in how you operate. If you and your spouse, let's say, have modified adjusted gross income that exceeds the threshold, you have to come up with a different plan to benefit from those losses. To begin, let's review how the tax dollars get trapped in the first place. As you may remember, you must either have passive income from other activities or another source, or your properties, or both, to qualify as a real estate professional and materially participate in the rental property. For example, let's say on Form 1040 you have $20,000 in income, right? And you have one rental property. Let's further say that you have produced a tax loss of $10,000 a year for the last 6 years. None of that $60,000 you'll be able to deduct based on the tax law defining a real estate professional. So basically that $60,000 sits there trapped in the passive loss bucket, not available for deduction in the current year, or if you have other income, you can't offset it. That said, there's good news. There's good news, right? And even this bucket, as you can see it, the $60,000 is not gonna drown or disappear or lose its tax deduction attributes in some other way. The $60,000 simply sits and waits for it to meet some escape route. Here are the possible escape routes. One, generate passive income to offset that. Change the character of the rental to non-passive. And three, change the status, your status as a real estate professional, and pass the material participation test for the property. Fourth, sell the property, and I'm going to explain that later on. Here's a total release. That's escape three. The $60,000 that's trapped in the passive loss bucket is like money in the bank, right? It's like money in the bank. You just need to tap that cash. And it's really quite easy to do so. Here's what we're talking about. To release the entire $6,000, that's going to be a major jailbreak. Okay, guys, a major jailbreak. So you might want to do this right now, or you can wait. You have many options, and the good news is that you're the one in charge of the total release. To release these losses, you may need to make a complete disposition, meaning you have to sell the asset. For example, you can sell it to 100% sell it 100% to a third party, and right away, boom, you have deducted the entire $6,000 that was trapped. Now, the key takeaway, guys, the key takeaway I want you to know is one thing. To know that if you have rental property losses that are trapped in the passive loss rules, you have some strategies available to you. All right, you have some strategies available to you. So just reach out to someone like myself to kind of go through, what you have, your inventory, and see how we can best move forward with getting you that money that's trapped. So did this topic interest you at all? If it did, then like, share, and subscribe for more content. I'll be doing more of these videos as I go along. And if you'd like to review your rental project, as I said before, definitely give me a call. My direct line is 718-938-4601. You can email me, wayne@wscullycpa.com. And just to top it off, my name is Wayne Scully, owner of W Scully CPA PC, and I'm a business tax and business strategist. Our focus is to provide solutions to landlords, flippers, and real estate pros in the New York tri-state area. My firm offers tax compliance, business consulting, and high-value tax plan strategies to save thousands of dollars. At W Scully CPA PC, we say taxing is their job, saving is ours, or we give you $100. That's it for now, guys. Catch you later.